Let me share an idea that can change your life if you really get it. The richest people in the world, no matter where they're from, didn't get there just by earning a big paycheck. Here's the truth. 60% of rich people run their own businesses, 20% invest their money, 16% inherited wealth, 3% are famous actors, artists, or athletes, and almost 0% are people who only live off their salary without investing. This is true everywhere, from London to Tokyo. To manage money like the top 1%, you need to see what these groups have in common. It's simple. They all own something. Business owners have companies, investors own things like stocks, heirs control property or savings, and artists or athletes have special skills no one else can copy. If you don't own anything, you're stuck in a system, tied to bills, debts, and waiting for your next paycheck. This is what most people miss. But just knowing this won't fix things. The big question is, how do you change your future? That's where the 20-10-60-10 rule comes in. It's a plan that lets anyone, even if you earn a little, handle money like the rich. It's not about how much you make, but how you use it. The key: put 20% of your money into growing your wealth. This money should work for you, like buying things that go up in value over time, such as stocks or learning new skills. Most people do this. They get their paycheck, pay bills, and spend what's left on stuff they don't need, like new phones or eating out, ending the month with nothing. This repeats every month, year after year. The sad part? It's set up this way. You feel great when you get paid, but soon you're out of cash, working harder to cover bills and stuck. This is like modern slavery, dressed up as normal life. Let's be clear, having a job isn't like being a slave. Long ago, slaves got no pay but had food and a place to live. Today we work every day, get paid but spend it all on food, rent, gas, and bills. The difference? We think we're free. A 2023 study showed 78% of Americans live paycheck to paycheck, proving it's a trap. Seeing this truth, like the Stoic idea of facing reality, means you need to act. Start by using that 20% to buy things that make money for you, like investments that grow, and might even beat your job's income. You might say, I don't have extra money to invest. I understand, but starting early is super important because time helps your money grow. Look at Lucas and Peter. Lucas saved $500 a month starting at age 20. Peter started at 30, saving $750 a month. Now that you know to start, pick smart investments, from safe to risky. If you're new, safe choices like savings bonds give about 7 to 9% growth each year, safe but not huge. Index funds, called ETFs, are an easy way to buy stocks. They follow big markets, like the top 500 US companies, and spread out your risk. They grow 8 to 12% a year, safer than picking one stock, and can include big companies or new markets. Learning a high-paying skill is another great choice, like the Stoic idea of improving yourself. Skills like computer coding, online ads, or design can give you way more than 20% growth. A $2,000 course might get you a $50,000 better job in a year, paying back fast. Jobs in tech and creative work are in high demand, says a 2024 report, so these skills are strong even in tough times and can't be taken away. Real estate funds let you invest in buildings like stores or offices without buying them. People pool their money, and you get a share of the rent each month like a paycheck. These funds grow 10 to 12% a year, more than a savings account. But if the buildings lose value, you earn less. Check them out carefully before you start. Stocks are pieces of companies and can make good money, but they're tricky. Don't pick just one stock. Buy 20-30 companies that made money for the last 8 years, like big names in the stock market. These can grow 15 to 20% a year, says past data, with less risk. Stock markets go up and down. 2008 and 2020 had big drops. But if you stay calm, you can get 10-15% growth over time. Staying steady, like a Stoic, is important. Online businesses, like selling products or teaching online, can make over 20% growth, but they're hard. A 2024 study said 40% of people trying these lose money at first, so save extra cash and be ready to learn from mistakes. Things like Bitcoin or gold can make or lose a lot. Bitcoin jumped 300% from 2020 to 2023, but fell 60% in 2022. Only try what you understand, like a Stoic being careful. Set up automatic payments to your investment account when you get paid, so you save before you spend. The second part of the rule is 10% for safety. This protects you when things go wrong. Imagine a worker whose computer breaks. Without savings, they borrow money, miss work, lose jobs, and get into debt. 25% of workers like this had trouble, says a 2023 study. A safety fund stops this. Figure out 5 months of must-have costs, like $2,300 a month, so $11,500 total. Save 10% each month until you have it, ready for things like doctor bills or losing a job. Keep this money in a safe place like a savings account, where you can get it in a day and it earns 4 or 5% a year to keep up with prices. Don't use risky things like stocks or Bitcoin. Build it faster by setting up automatic savings, putting back any money you use right away, and using apps that save small bits, like 70 cents when you spend $15, $30. When it's done, use this 10% for growing wealth or the last part of the rule. The 60% pays for things you need: rent, food, power, gas, insurance, and simple clothes. Even people with big paychecks spend too much, wasting 80% on extras, says a 2024 study. Trying to look rich. Real wealth grows quietly, like Stoics who live simply. Stop spending more by checking your bank account and cutting things like unused apps, which cost people $400 a year. Save big by lowering rent, sharing a home, or buying used cars. Make smart choices with a Stoic trick. Before you buy, ask, is this a sudden want? Wait 5 days. Is it for show or use? Pick things that last. Does it make life better? Skip buys just for feelings. Keep asking, and you'll spend smarter without trying hard. The last 10% is for fun, keeping you happy. Saving all the time feels bad and makes you spend too much later. 40% of savers do this, says a study. Put 10% in a fun fund every month, kept separate. If it runs out, wait for next month, learning to be patient. Choose fun things like trips or meals with friends over stuff, because studies say these make you 30% happier. This fits with Stoic ideas of enjoying now. The 20-10-60-10 rule with Stoic focus balances growing wealth, staying safe, paying for needs, and having fun, helping you build riches without giving up too much. Start today. Like the Stoic idea of doing what you can control, your money future is waiting. Thank you for watching, and see you next time.